my opinion, this is by far the best way and the best time to look for setups and execute trades with US30. So in this video, I'm gonna be breaking down one of my recent US30 trades that made me over $14,000 so that you can start identifying and taking setups with this strategy and see for yourself why it's the best way to trade US30. Now I'm gonna make this as simple as possible. I am looking for a very unique footprint before I start getting involved in the market. And I use these for two different reasons. The first reason I'm looking for this footprint is to find my key areas in the market where I can either expect or anticipate a reversal to happen or a continuation move. So I'm going to slide the screen over and I'm going to quickly draw what this footprint looks like. So essentially what I'm looking for is price to consolidate or create a series of highs or a series of lows, otherwise known as equal highs and equal lows. So that would look something like this. So here we have a sideways moving market creating equal highs, and we can see a support level now established right here. So I'm going to draw this quickly on top. That's going to represent our double top there, our resistance level. Here is our support level. And the signature that we're looking for, or the footprint, is essentially price moving above or below this range and then aggressively doing a 180 in the opposite direction, showing impulsive, strong price action that then breaks structure and creates either a high or a low. So in a bearish environment, which is what we're working with today, this is what it would look like. So we would see price push up above these highs and then aggressively shoot to the downside, breaking structure here by exceeding and closing below this low and making a lower low. When this happens, now we would consider this manipulation. And the reason why we consider it manipulation is we can then assume with a ranging market that a lot of opinions and ideas are being formulated. Bluntly put, it's enticing retail traders into the market too prematurely. So people would be looking at the top here for selling opportunities, maybe buy stops, looking for breakouts. When price does break out, you will have traders looking for break retest like this, looking for buying opportunities here. You're going to also have people looking for buying opportunities on the support level, and also as well looking for that breakout, something like this, looking for those sell stops. So there is a lot of liquidity that is accumulating above and below this range, and ideally this footprint, this manipulation is the trap. So we want to look for areas where we can anticipate the trap, and then we want to find the trap, the manipulation itself, and depending on the time frame, we're going to be using it for entry or for a key area. So on higher time frame, we're looking for this type of price action that creates a low like this. So let's just say this is a daily or weekly time frame. The way that I like to use this is I would then look for price to come back up into this manipulation candle here, and in this area is where I would then look for a fractal version of that pattern, which means I would be looking for that same exact pattern to happen in alignment with the big picture, which is bearish here, then targeting lows. So this would just be on a lower time frame. So we can kind of see that here. Price moving sideways, creating that double top. We can see the same thing on the bottom. Price pushes up and then slams aggressively to the downside, breaking structure, giving us a lower low. So that is ideally what we would be looking for. And then, just to show you how fractal it is, inside this continuation move right here, we can even drop down lower and then continue looking for this exact pattern. I can confidently say that 99, 98% of my entries, probably even higher, are all backed by manipulation. That's where I'm looking for my entries, and I'm placing my stops above or below the manipulation. So in this case, my stop would be above here or above here. So let's break that down and show you exactly what I mean. So when I was looking at this US30, and I've been following it for quite some time inside my community, we have been looking at this all the way from the top here. Now, the other big component that I use is time. So there's a lot of reasons that we want to pay attention to time. The whole market in trading is based on time events or time variables. Market opens and closes at specific times. Sessions open and close at specific times as well. Then we have overlaps that happen at specific times. Candles open and close. There's so many things that happen related to time. Then we look at the macroeconomic red folder, orange folder news events. We have news events that happen at the same times on the same days every single month. So when we look at this price action here, this is what we can use to align with an event that might be coming up. So this event particularly, this was an FOMC. So if there's a pattern that was created, we can use the price action available for possible entries. If there is no pattern available, let's say price just looked like this and just moving sideways, and we have an event coming up, a major red folder news event, maybe a CPI event or an NFP event, we can then anticipate that there's a buildup of liquidity above and below this sideways moving market and look for manipulation and a pattern to be created during one of those news events. So if I scroll back up to the top, and what I'm going to do here is I'm going to just show you the same exact thing that we're going to talk about today. We can see this candle right up here. This is an older example that we used. This was where we started the breakdown. We can see this was a support level right here. I'm going to change the color of this. And we can see a flag pattern right here. So we can see price broke through, tested this support, started to push up, and then we got this flag pattern right there, pulling back into that support. And we can see a breakout right here. And this is just inducing buyers. Maybe they're buying off of this level here. And we can see as soon as price pierces this high, we can see it immediately ran to the downside in a strong bearish impulsive move, which eventually came all the way down here, created a low before we see this really nice bypass harmonic pattern right here. This little double bottom came up, swept this high, respected this structure point, and then made this low. So this was a major key area that I was paying attention to right there. And leading us up to this price action, this is exactly what I demonstrated with price pulling all the way back up into that point of interest, running on this high here. Again, that break retest level, inducing sellers into the market too early. And we saw price push up and give us that sideways movement here, creating a double top and this support level right here, this break retest level. We saw price aggressively push up above these highs right here, push into this daily manipulation candle here that started the move. And once we saw that happen, this ended up being a failed high, making a lower high, then a strong bearish impulsive move, making a low right here. So that is exactly what we're looking at in this price action right here. And we can see price push back up here, coming up into the kill zone of this trading range right here. And also again, started building liquidity with these relative equal highs. And we saw price push up and then started melting. And guess what? If you go look at this day right here, which was February 14th, this was a CPI news event that also created the exact same pattern. Price moving sideways, it swept up and then swept down. And for the sake of the video, I'm not going to bore you with going into that. You can go check that out yourself. It was US30 on a 15 or 30 minute time frame on the last CPI event in February, which was, I believe the 14th. So let's get into the price action here. So I'm going to drop down and we're going to start getting into the price action. So One of the things that I was looking for here, and you can see it's almost the spitting image of what I just showed you on that daily price action. So if we take a look at this price action here, this was significant to me because we saw a price moving sideways, consolidating, and then we saw price aggressively push up above these highs, and then a strong 4-hour bearish engulfing candle, which led to this very strong move to the downside, a very strong impulsive move, then creating a lower low. So I'm going to put a X on this, and when you see me draw those X's, that is just representing that a low or high has been rated. This area here then becomes a point of interest. So we're going to mark that up right here. I'm going to label it just so I know it's a 4-hour candle. And we can see this pattern moving sideways right here. So again, we're looking for the exact same thing. And looking at this, I want to ask a very simple question. How do we know price is going to react here and give us a pattern? How do we know it's going to really do anything? And the answer is we don't know. There's never going to be a time where you're going to find certainty in the market. This is a place where certainty cannot and will not ever exist. But all we can do is map out potential areas based on this signature, this footprint, and then we can look for further confirmation. So, price could easily react here. It could easily come up higher into another higher point of interest. Maybe this candle right here, which swept these highs before this move here. So essentially what you're doing is you're mapping out these signatures on higher time frame, and then you're looking for price to return to these areas and then give you the exact same pattern. So if price is going to respect this signature pattern here in this manipulation candle, it's going to do something just like we've been seeing in all the other examples. It will swing up above those highs and then aggressively push to the downside, giving a bearish impulsive move and a lower low here after breaking structure. Then when we see that, we can get to work and we can start looking at our entries and start dialing into a lower time frame. Let's drop down to a 1-hour time frame, and I want to also point out that the price action that you're about to see is also another major red folder news event. So again, it's just so easy to identify major news events by pulling up the forexfactory.com and just taking some time and identifying major red fold news events. So this is CPI. This could even be a PPI event. This is a NFP. This is an FOMC, any type of rate news or unemployment news. You can plot those on your charts looking at the time and the dates on the bottom. And I like to put horizontal lines like this and just say, okay, hey, here is FOMC. Right? And that's what this event was. This was an FOMC event. We actually were able to catch a buy into the sell before the setup I'm going to talk about today, but that's nonetheless. People shy away from the news, but you should be able to use the news and put that in your arsenal because it's a very powerful weapon when you compare or when you match time and price together. So let's press play here. Let's take a look at the price action. So we're looking for price to push up. There's the aggressive push up, running these highs, coming into that 4-hour candle marked up right here, and a strong move to the downside, breaking structure. So this is, again, that signature pattern that we're looking for. So this was a really nice setup. We actually were looking at this spot here for price to come in, which it did perfectly. And this was a buy to sell, just to show you how precise the news events are. We were looking at that entry. Price came in, we market executed, it pushed up. We were looking for take profits here in that 4-hour. This was definitely a riskier trade because we were so close to that 4-hour manipulation candle. But this was overall the pattern that we were looking for right here. So now I'm going to let price play, and I'm going to put on my sessions indicator, and I use this indicator here because this lets me know exactly the price action that is forming in different areas or different times of the market. So this white's going to represent Asian session. That is typically, especially for US30, slower price action. You can see it right here. More moving sideways, consolidating until we get into London, where we can see more volume come into the market. That's why we can see an impulsive move. And then we have the maroon color, and that's the New York London overlap. And inside the New York London overlap, we also have another very unique special time that we want to pay attention to while trading US 30. And that is 9:30 a.m. Eastern. And that is the start of equity. And when equity opens and the stock exchange opens at 9:30 a.m., that's important, especially trading indices, because that is the start of the volatility, because US 30, NAS 100, S&P 500 are all comprised of stock. So that's when we expect volatility in the market. So now that we see this pattern here, and when you see the red, that's just representing New York after London closes at 12 p.m. I'm going to press play here, and that's going to lead us up to this setup. So here's Asian session moving sideways. We can see it's more of a consolidation, a little bit of a flag pattern right here. So when we have this pattern, again, now I can see my manipulation. That is a key area. And you can see all I'm doing is just rinse and repeat, the same patterns, the same areas, all the way from higher time frame. And I just keep doing the same thing until I get to the time frame that I want to trade. And for me, I'm more of an intraday trader. I focus on US 30, especially at 9:30, and I am in and out of the market in sometimes minutes, sometimes hours, never longer than a full day. So what I'm doing here is I am setting up for equity, and that is again at 9:30. So I'm going to put that right here. I'm gonna have to drop down to the 30 minutes so we can represent equity. And it doesn't necessarily entries or setups or patterns are going to happen right at 9:30. Sometimes we can get a lot of entries, but this is that point of interest here. So essentially what I'm looking for is price to retrace. And yes, you can get entry right off of this, but in this case, I didn't, because of how big this stop loss was and how big my targets were. The risk to reward was not there. So what I was looking for is for price to pull back into the kill zone and then show a breakdown. And inside this breakdown, I was going to look for the exact same pattern and then look for entry to then target this low right here. So that's what I was looking for with this US 30 setup. So I'm going to drop down to the 15-minute time frame, and we're going to watch the price action as we come in to the overlap. So here, price at the end of London here made a double bottom. That is a target. If we slide this all the way over, again, it's very similar to all the other areas where we were looking for manipulation to happen. We're using support and resistance where others might be looking for opportunity, and that's where we're either targeting or looking for manipulation for a new entry. In this case, we were targeting where most traders are usually using this area for an opportunity to perhaps buy off this double bottom here. They would look for a break of this high, and then they would look to get in. So let's continue with this price action here. So now we have equity and we're in the overlap, and this is when we can expect a lot of volume and volatility with this indice. So what I'm looking for now is a break of structure. So that's when I drop to a 5-minute time frame. And the reason why I'm doing that is if I go to a 15, you really can't see it. Just like a 30-minute, it's very impulsive. It's just showing blue candles. But if I start dropping time frames, typically 2 time frames from what you're looking at, you're going to be able to see the actual swings within this impulsive move. So that's where I dropped down to the 5-minute time frame, and now we can see the swing lows. If I go to a line chart, we can see them here, here, and here. So let's press play here. So essentially now I don't know where price is going to react. It could pull all the way up. It could pull and react anywhere on the kill zone. Essentially what I'm looking for is price to just start turning. So here is the 45. And again, I didn't take this spot just because it's way too big for my risk to reward. So back to the 5-minute, I'm going to press play here. We can see it's in that candle now, and this is where I'm looking for price to start turning, offering entry. So here we can see a reaction. If you go up to the 30-minute, we can see price has started pushing down and starting to look impulsive. So in my eyes, I'm getting ready for or anticipating this to be the case. So this start to run and start take these equal lows here. So that's where I continue zooming in, and now I'm on the 3-minute just so I can see the price action. And again, that's all I'm looking for is the same type of pattern. So I'm going to press play here. And at this point here, that's the last structure point here on the 5-minute, which we can see price break. And this wasn't a major manipulation candle, but we can see some short-term highs. Price pushed up above it and then came down and make this low. So this was actually my first point of interest that I was looking at for shorts down to that double bottom. Unfortunately, price did not come back and give me my entry. And this would have been just under a 1 to 8 risk to reward. So I'm going to press play. And then I saw this. So this was the initial pullback that I was looking for up into this candle, and it came short. But we can see 1, 2, 3 short-term highs. Price pushed above it into this imbalanced price action and then painted a strong bearish engulfing candle and made a new low, a new structure point. So at that moment, my entry transitioned down to this spot right here. And that's my new entry. This is my stop loss here, and down to these lows here, that's my target. And we improve our risk to reward to now just over a 9.5. So a 1 to 9.5. That means you're risking 1 for a 9.5% gain. So now I'm looking for price to retrace back up into this candle. We have the short term aligned with the higher time frame picture here, and let's press play. So there I thought I was going to get unlucky and I thought I was going to take off again, but we can see some short-term highs here, and then price pulled back up into this imbalanced price action, came up into this candle that offered my entry. I market executed my shorts, and then that's my entry right here. And we started breaking down. Took a little bit. I think this trade was actually about 53 minutes. I can actually pull it up afterwards. Then we started getting a nice little push up above these highs here. You can see even on a lower time frame, it's doing the exact same thing before price actually moves. If you look at these highs here, price wicked above before pushing down. Then we have these equal highs right here. Price pushed up above those highs before the move here, and we can see price then kicked on the jets, gave a nice impulsive move, came down and hit the target and went through it, offering some really nice risk to reward here. This was a beautiful trade, lower time frame aligned with the higher time frame, beautiful risk to reward, and one of my best and favorite setups that I've taken so far in 2023. So I really hope that this was helpful and that you got value from this video. Again, make sure to like and subscribe. I have a ton of videos. We drop 2 new videos every single week. There's a lot of material here that can really help you dial in your trading so that you can also become a consistently profitable trader.